Hello, and welcome to the Victoria Forum. I'm Saul Klein, Dean of the Gustafson School of Business at the University of Victoria and Chair of the Victoria Forum. Established in 2017, the Victoria Forum brings together change makers in the search for solutions to the pressing problems facing our people and our planet.
The Victoria Forum will bring together policymakers, business leaders, academics, youth community groups, non-governmental organizations, and Indigenous communities to generate ideas for a better world.
We are at a time right now where humanity is facing critical environmental problems. With the pandemic that we are currently facing, we are seeing a change in the climate as humanity is being forced to live a cleaner and healthier life. We have given Mother Earth a chance to heal, but we need to continue our efforts to protect and preserve her, not only for our own sakes, but for our future generations.
Our discussions are intended to be evidence-based and inclusive of different perspectives, but united by a common purpose of wanting to make a difference. As our country's chamber of sober second thought, the Senate is a perfect partner for this enterprise.
I am delighted to be part of the advisory team that is putting together the Victoria Forum, and I very much look forward to these discussions and look forward to your participation.
The Virtual Victoria Forum is positioned to curate learnings, questions, and shared experiences in the face of uncertainties. Join us as we explore new learnings and perspectives.
I hope we can all look forward to continuing the conversation and developing solutions for a better world at the University of Victoria. Thank you.
Welcome everyone to today's webinar and to the Victoria Forum. My name is Sébastien Beaulieu. I'm Associate Co-Chair of the Victoria Forum, and I'm very pleased to be with you today. Je suis aussi ambassadeur du Canada au Sénégal et il me fait particulièrement plaisir d'avoir un Sénégalais parmi le panel d'aujourd'hui. The Victoria Forum is a great and innovative partnership between the University of Victoria and the Senate of Canada. Vous l'aurez compris, le Forum de Victoria, c'est un partenariat entre l'Université de Victoria et le Sénat du Canada. Et puis, c'est une activité, une initiative qui ne serait pas possible sans le généreux soutien de TELUS et de Vancity, qu'on remercie. Today, and the series of webinars on the Victoria Forum is sponsored by TELUS and Vancity, and we do thank them for their support. Today's panel on the Great Reset is a very timely one, and with no further ado, I'm pleased to hand it over to Basma Majerbi, qui est aussi organisatrice du panel d'aujourd'hui, mais aussi collègue et amie de l'Université de Victoria. Over to you, Basma Majerbi from UVic. Thank you.
Thank you very much, Ambassador Beaulieu. Hello, everyone. So I'm Basma, as Sébastien mentioned. I'm a finance professor at Gustafson School of Business at the University of Victoria, situated at the traditional territory of the Lekwungen peoples. And I'm absolutely pleased to take part in organizing today's webinar. As Sébastien mentioned, it's a very timely topic, particularly for us here in Canada, with the abrupt resignation of our finance minister, Bill Morneau, on Monday. I certainly did not intend to open this session by talking about an event like this, but we learned from the pandemic that uncertainty is the new normal. So I'd like to revisit this event, particularly to set the context given our international audience. So many commentators in Canada and internationally refer to disputes between Mr. Morneau and Prime Minister Trudeau over what the recovery plan should look like and how ambitious it should be. The Canadian government, like many others around the world, have been forced to inject billions of dollars to fight the short-term and potentially long-term effects of the pandemic. At the same time, it is also under huge pressure to use the massive stimulus spending, with the budget deficit now projected at over $340 billion, slowly on its way to reach 20% of GDP, an unprecedented level certainly. So it's under pressure to create a greener and more inclusive economy. So Tuesday's announcement to nominate Ms. Chrystia Freeland to take over the finance portfolio, at the same time announcing that Parliament will be prorogued until September 23rd to give the government time to prepare its new recovery agenda, it offers us a taste of what's likely to come. So in this context, Mr. Trudeau framed the pandemic as an unprecedented opportunity for a reset. And in her statement, Ms. Freeland said, quote, "The restart of our economy needs to be green. It also needs to be equitable and inclusive." So, end quote. Whether this pledge will materialize or not remains to be seen. We'll see in the discussion how this plays out. Also, whether the private sector, particularly investors, will support such transition plan is not clear. But similar debates are happening everywhere in the world in the wake of the pandemic. What is clear, though, is that the pandemic brought into light the many widening gaps in terms of economic, social, and environmental divides in all countries, with issues such as systemic racism, climate change, threatening to amplify these gaps if we do not act now. The recognition by many world leaders, economists, and civil society actors that we cannot continue with business as usual is certainly a welcome call for action. And so here in Canada, like in many other countries, we've seen a number of recovery and resilience task forces, both at the national, provincial, and even here in the local level with our own Rising Economy Task Force in Victoria, all trying to contribute ideas and pathways for a better future. Of course, we as academics have also a duty to contribute to this debate, which is why I'm absolutely honored to co-organize today's webinar on behalf of our school, and looking forward to learning from our panelists about what the Great Reset means in practice for various financial sector participants and how we can move forward towards a greener, smarter, and more inclusive future. So let me take this as an opportunity also to thank our partners for this webinar. So CFA Society Victoria, which has been quite active in promoting sustainable finance through various professional development events in our region, and also WCM, Women in Capital Markets, an organization working tirelessly to promote diversity and inclusion in capital markets over the last 25 years. And now it's my absolute pleasure to introduce Dr. Amadou Sy, who will be moderating the discussion. So Dr. Sy is currently a division chief at the African department in the International Monetary Fund. He held various positions at the fund since 1998, spanning many financial crises and worked on many countries. He also led the Africa Growth Initiative at the Brookings Institution, and his work there has been very influential in policy circles, and he advised organizations such as the African Development Bank and United Nations. In addition to his operational work, Amadou remained quite active in research with the publication of 2 books and many academic journals in many academic papers in various journals on various topics, including financial technology, macro-financial linkages, and governance. Should mention that his policy work won a runner-up 2011 ICFR Financial Times Prize for best research on financial regulation, and his work has been highly cited also in press such as the Financial Times, Economist, Wall Street Journals, and many other outlets. Thank you, Amadou, for agreeing to moderate the panel. Over to you.
Thank you, Basma, and greetings from Washington, DC. It's really a great pleasure for me to be returning to Canada, even if virtually. I was privileged to have spent 10 wonderful years of my life in Quebec and Montreal, in spite of two heartbreaks, the loss of the Nordique de Quebec and the Montreal Expos franchises. But at least the Montreal Expos are now the Washington Nationals, so that's that. So I was very enthusiastic about Basma's invitation. But another reason I was excited about this event is that it really gives an opportunity to discuss a great topic at a rather unique juncture of history. We are all witnessing the devastating impact of the COVID-19 pandemic, the loss of life, the loss of jobs, the rising inequality. And it is not an exaggeration to say that nobody nowhere is immune to the consequences of this pandemic. It has certainly forced everybody to ask many important and even existential questions. And we have heard from many policy circles a call to action, the need for a great reset. But what does it mean? What does it entail for different people, for different stakeholders? There are so many challenging questions. But fortunately, we have an excellent high-level panel to help us go through some of the answers today. And it's also with great pleasure that I am going to introduce the first member of the panel, Dr. Jayla Pazarbazioglu from the World Bank. Jayla is Vice President for Equitable Growth, Finance and Institutions, also known as EFI at the World Bank, since October 2018. In this role, Jayla provides strategic leadership to the best expertise from the World Bank to help low and middle income countries build the foundations for inclusive and sustainable growth, and thereby make progress towards achieving the World Bank Group's twin goals of 1, reducing poverty, and 2, boosting shared prosperity. The portfolio she oversees is $30 billion of operational and policy work and advisory engagements. And prior to her assignment at the World Bank, Jayla provided leadership for advancing the World Bank's group's development goals. And before that, she was at the IMF, where she was deputy director in the Monetary and Capital Markets Department, in charge of the work on financial sector regulation, supervision, crisis management. I will have to shorten her resume because it's quite long and impressive. So I will just say that before the IMF, or in between the IMF, two IMF carriers, she was also Vice President of the Banking Regulation and Supervision Agency of Turkey. So with that, I'll stop here and let Jayla address some of the questions we all have regarding the Great Reset. Thank you.
Thank you. Thank you, Amadou, for the introduction. And thank you, Basma and Ambassador Beaulieu, for your insightful remarks and also being able to participate in this very important discussion. And I'm really looking forward to it because I don't think any of us have the answers to the difficult questions that Amadou posed. So I have 3 key messages that I would like to elaborate on in the few minutes I have, and then look forward to discussing it with everyone. First, the timing of the crisis. We arrived at this at a historically weak moment for the global economy. The path we were on was not sustainable. Second, the striking role this crisis has played as the great unequalizer, magnifying rather than narrowing disparities in income, in wealth and opportunities, so making the path even more precarious for many. And third, there's an urgent need for public policies and private sector action at the domestic, regional, and global levels to achieve a much more sustainable path going forward. It cannot be business as usual, and all will have to contribute. So if we can start quickly before COVID, if we look at the accumulation of debt in many of the emerging market and developing economies, we were already at the crest of a wave of global debt buildup already pre-COVID, by now it's actually unfortunately looking more like a tsunami. We had the waves over 1970, 1989. We had a second wave of debt accumulation between 1990 and 2001, a third one between 2002 and 2009, and the fourth one, which started in 2010. And already back in December, we were warning that this is the highest, the largest, the strongest wave. And of course, post-COVID, this has been even much more important. And unfortunately, previous waves of rapid and broad-based accumulation have all ended up with financial crises in many economies with substantial and long-lasting output losses. So if you look at these charts, you can see that the red bar represents the last wave we have been in, and the increase in the accumulation of debt both annually and over time has been really massive. This reflects, of course, the investment needs in many of these emerging markets and developing economies, but also the savings glut, the so-called savings glut in many of the advanced economies, as well as in China, which is very much linked to the inequality issue and the concentration of wealth at the hands of few. And that means lower consumption and also money flowing into assets or into financial investments, which did not translate into productive investments. And we see this in the numbers. So if you look at the decline in productivity growth rate since 2010, that's the last part of the chart, left-hand side chart. This has been the longest, steepest, and the broadest on record. And the right-hand chart shows that the rebound from the most recent slowdown has been the most tepid, a third of the size of the rebound in 1990s and 1/7 of the size of the rebound in 1980s. So that build-ups hurt productivity growth in two important ways. First, by encouraging the misallocation of capital into low productivity sectors in the short run, and second, by depressing investment and technological innovation in the long run. We also have, of course, prior to COVID, we were warning about climate change, which is acting as a huge threat multiplier with the potential to push millions into poverty and undo decades of development gains. Climate change was already on track to reduce the average incomes of the poorest 40% of countries by 75% before the end of this century. So all this to say, the bottom line here is that we were already on a non-inclusive and non-sustainable path prior to COVID. So then comes COVID, which we call, many of us call the great unequalizer, and we are in the midst of the deepest global recession since the Great Depression of the 1930s. Governments did act fast, including, of course, Canada, deploying extraordinary policy measures to save lives and protect livelihoods. Globally, this amounted to about $10 trillion. And you can see here that the advanced economies are doing whatever it takes. The middle-income countries are doing whatever they can. And lower income countries are really trying to get by with the support they can get from multilaterals and others. So what that means is, because the shock is so huge, impact has been huge, but the room, the fiscal room and the monetary space to deal with the crisis has been much less in emerging markets and developing economies, with, of course, the consequence that we have this poverty tracker to reach the 2030 Sustainable Development Goals of ending extreme poverty. But with this crisis, as you can see, even with the baseline scenario, we will not be able to reach the goal, and we will have actually additional at least 70 to 100 million people pushed into extreme poverty, with women and youth, of course, unfortunately being the hardest hit. So there's no doubt that this pandemic will have and will leave lasting scars. This is the evidence from the past recessions. It takes about 5 to 10 years to just get back to where countries started. And that's if you're lucky enough to have a financial crisis. And of course, that deepens much more the challenge. So our collective challenge is going to be, how do we reduce these scars? How do we mitigate them? And this will mean containing the damage and putting in place policies for a resilient and inclusive recovery at the national level, at the regional level, and the global level. So I'm not going to go into the details of the solutions because I think we will be discussing them in the subsequent period, but I just want to name them and we can come back to them. And these are four key issues that we need to focus on. One is to contain the damage, and we can discuss further what that actually implies. Second is to fix the debt and capital allocation problem that we already had prior to this crisis. Third is the dealing with an equality and inclusiveness problem in terms of access to opportunity. Not necessarily equal access to outcomes, but equal access to opportunities, including safety nets, access to digital technologies, health, education, and so on. Last but not least, the fourth issue is making sure that we speed up the transition to greener growth with climate-smart infrastructure, as well as using the financial sector as a source of innovation to create instruments that diffuse catastrophic risks in a cost-effective way. So to summarize, these four actions will require, as I said, domestic, regional, and global policies, and very much so the coordination and collaboration across different stakeholders, be it the countries, be it the private sector, be it the public sector, and of course the multilateral institutions. So over to you, Amadou. Thank you.
Thanks, Jayla. We now, after talking about green growth, we're now going to talk about green swans. And to do that, we have Deputy Governor Dr. Paul Baudry, Deputy Governor of the Bank of Canada. Paul became Deputy Governor of the Bank of Canada in 2019. And in this role, he oversees the bank's financial system analysis and shares responsibility for setting monetary policy. And before coming to the bank, Paul spent 25 years as a professor at the University of British Columbia, where his research focused on technical change and growth, labor economics, monetary policy, and also financial system stability. He has also held academic positions at Oxford University, Boston University, and Université de Montréal, where I took classes, and was a visiting professor at MIT, Panthéon-Sorbonne Université, and Université de Toulouse. Mr. Baudry held a Canada Research Chair in Economics from 2000 to 2015, and is a two-time recipient of the Bank of Canada's Research Fellowship Award. Mr. Baudry was born in Montreal and holds a PhD from Princeton University. So, Deputy Governor.
Thank you very much, Amadou. That was a very nice introduction. So it's a real pleasure to be here to discuss the issues. I do think we're learning a lot by COVID. It's a real shock, as Celia was kind of suggesting at the beginning. We are in a very particular period of time. We've learned already a lot, at least in Canada, by this shock, how much people's behavior could change, how people could react and get together to kind of adjust to this. And we had resources in Canada to do it. And I think that's been a very good sign. At the same time, we see how it's difficult to get behavior to change in the longer run. As things are kind of pursuing now, we're seeing, especially here in British Columbia, we're seeing some difficulties emerge of getting people to kind of keep on following the rules. So we see a lot of both good sides and bad sides of how we can kind of address to a crisis. Now, in my comments here, I want to kind of discuss, since the general theme here is the making finance work, I want to kind of discuss that in the context of how it relates to climate issues. That's certainly one of the big issues. We can get back. All the inclusiveness and different other issues are obviously very important also, but I'm going to concentrate some of my initial remarks on that side. And that's important because at the Bank of Canada, first of all, we don't have a direct mandate to do environmental policy. That's not our role. We leave that to the elected officials. But we do have a role to try to make sure that the financial system is working properly, is doing what it needs to be done. And I'll kind of address, kind of keep my comments kind of giving an idea of how the Bank of Canada is kind of working in that way. In particular, trying to use something that I'll kind of describe, using scenario analysis interacting with the financial sector to help the transition to a greener economy. So when we're thinking about the risk associated with climate change, we find it very useful to divide these risks into two categories, thinking about the physical risk, the risk that we know of the floods and the storms and the fires and all that, and the transition risk. So as we put behavior changes, as we put different policies in, trying to move to a lower carbon economy, we're actually going to cause a different type of risk. We're going to try to move away from the physical risk into some of the transition risks. This would include unemployed people in certain sectors that would have to be changed. This could include, stranded assets. This could include financial difficulties. It's a whole set, but it's also a set of opportunities. There's opportunities to develop new technologies, new aspects on that. So we have the physical risk and the transition risk. And a large part of what we have to think as a society is how to make that transition more easy. We need the transition to stop those physical risks. We have to move to a lower carbon type economy, and how to make that work properly. Well, all the players have to play a role in there. Obviously, we need the government to play its role in kind of setting some of the agenda in the environmental policy. We need the corporate sector to invest in the right type of technologies as we move forward. Obviously, households have to play a big role here too. We have our behaviors. There's things that we used to do that we have to kind of think about how we're going to change those and kind of reflect that. And we need the help of the financial system to work those pieces together. Where's the role of a central bank? And like I said, well, the central bank, obviously one of our roles is in monetary policies and always trying to help the economy get through whatever difficulties. But more generally here, there's also a role of kind of looking at the financial system. So us at the Bank of Canada have a special mandate also to kind of favor financial efficiency and favor financial stability, so that resilience. So one of the important things is in this transition, what you want is that the financial system works well and helps the transition. It doesn't become a barrier to that transition. For example, if the transition becomes and creates a financial crisis, that'll make the transition more costly and harder to kind of implement. So one of the big parts that we're working at the Bank of Canada is trying to make sure that financial system is resilient to help this transition and to make sure that people understand where the different risks so that you kind of know where to invest, helping the price system help the financial sector to invest in the right areas. And one of the big parts there we're developing is something, and I'll give you a bit of an idea to give some examples, is the scenario type analysis I was discussing before. So this is one tool that we're using right now, very much in conjunction with the financial institutions. And when I talk about financial institutions here, I really mean a whole set. So these include the banks, the different kind of pension funds, the insurance companies, and trying to understand what might the future look like. Now, this future is very uncertain right now. There's lots of different paths, especially on the climate side. It depends obviously on the different policies. It also depends on technology. It depends on how people are going to evolve as consumers. And we can look at some of those different scenarios, and we try to develop different scenarios and see how the financial system would work out. In particular, we're trying to evaluate the resilience given what they're doing right now. And this, like I say, is very much in conjunction with the financial system to allow them to kind of see, are they going to be resilient? Are they investing in the right places? Do they recognize the risks that are involved? I do want to say that our initial kind of interactions with the financial market is very positive in this way. They also want to know if they're doing the right thing. And so there's a real room to kind of get that cooperation going. So just to give you an idea of some of the elements that kind of build in. So we have both kind of a top-down and a bottoms-up approach to this general idea of kind of trying to figure out where the big risks lie and how we should change things. And we work from different scenarios. When I say scenarios, it's not that we know what's going to happen, but we can look at different ones. And I'll give an example on the next slide. And that scenarios include different aspects of how we see climate policy generally kind of being changed, how we think about the technology options that might be available. Then we try to understand how that would affect the economy in general in terms of its the growth aspect, changing the different sectors, how much we'd have to have people moving around between sectors. And then we can think about how that moves back and affects the portfolios of a lot of the financial institutions in terms of their credit risk, their market risk, liquidity, different aspects, and whether they would become, by the end, are we in a difficult position or not, and helping them kind of understand where or in what areas they might want to be investing, and also helping the public understand where they might want to be putting their different funds to kind of reflect this. And that's the aspect of trying to get that financial system to work through this transition. Now, to give an idea, when I'm saying different scenarios so as a base kind of aspect, we've been working with at least 3 different scenarios, and we kind of want to work with more, but at each time you kind of have to start somewhere. Obviously, there's one scenario, which is kind of a very negative scenario. If we don't do anything and temperature keeps rising and we really get all those physical risks kind of materializing. Then if we think about ones that kind of create the transitions, we can think about different transition paths there. Some that are more orderly, for example, if both Canada and the global economy kind of get their act together and manage to put in policies that satisfy the needs of kind of reducing the amount of greenhouse gases so that we keep the heating of the planet below this 2 degrees and going to that zero emissions goal for 2050. We could do that now, and we can think about that as one transition. So that's one aspect that we kind of work that through and think about how our financial system would be working through that system. But there could be another scenario where actually the world isn't getting its act together and we basically hardly do anything until 2030, and then drastically we really see things are really bad and we kind of try to readjust. We want to have that as a scenario, trying to give these different scenarios such that we recognize and we feel, would our system be robust? Is our financial system to help in that process? Or would this kind of create a crisis which would make the transition even worse? To give you an idea, the type of output that comes from these kind of scenario analysis, this is on this kind of orderly scale, kind of moving into this world where we change now and we go towards our 2050 goal of really reducing that greenhouse gas emissions. We see some changes. These are just examples I get. So it would mean a very drastic change in the production of oil, for example, over this period, in which for a place like Canada, that's actually a very important change and would kind of influence and affect a lot of our structure. We can also look as we move, and we often think about moving into electricity, for example, but we have to always think about where electricity is generated. If it's generated by coal power plants, we haven't helped a lot by moving into electric cars if they're kind of just using coal to kind of create that electricity. So a lot on the right-hand side of this panel here, we see the kind of breakdown of different aspects of the electricity generating kind of sector. And this is, again, this is at the world level of the type of changes that we'd have to see. We'd really have to see this reduction in kind of electricity produced by coal, but moving into obviously things like wind and solar, obviously a big part, but also we kind of use the technology of knowledge as we move that way, carbon capture type technologies, both for coal generated plants and in the natural gas sector, of possibly growing there in terms of kind of creating electricity using that type of technology. So that's the general kind of way, just giving you an idea of what we're trying to do at the Bank of Canada to try to help in this transition. So let me kind of end there and just remind me that we're looking at this COVID-19. As I said at the beginning, I think we've learned lots of good things about how, at least in a country like Canada, we could have gotten together for a shock and really addressing that. Actually, it's been quite impressive of what we've been able to do in the last few months. But at the same time, we see as it lingers, that becomes a much more difficult position. And that's the aspects we're learning right now. When we think about climate, we're actually in that case. It's a long-term type of problem. It's not just a shock. It's not just something that we can address at once. So we have a lot of those type of problems. So we can see where we're going to be going. I think scenario analysis, in terms of trying to make sure that the financial system works, is one tool that we're developing to help in this general transition period. So we want to use that. It's a process. It's an interaction with the system and trying to make people better informed. And hopefully that'll help the general system to work. So let me finish there.
Thank you, Deputy Governor. So Jayla, at the beginning, gave us a good overview, set the stage about the issues we are facing at the global level. The path pre-COVID that was not sustainable, this term that I like, the great unequalizer, And then there was this call for public policies and actions. Governor Baudry mentioned this important issue of how do we identify risks, how do we identify scenarios, how do we measure them, measure the risk, and how hopefully we manage them. But at the end, everything comes back to public policies, to public action. And they're here to help us navigate through these difficult, very turbulent waters of public policies is Senator Wu. Senator Yuen Pao Wu has been appointed to the Senate of Canada in November 2016. And the Honorable Senator sits as an independent representing British Columbia. He has been the facilitator of the Independent Senators Group since 2017 and was re-elected for a second two-year term in December 2019. Senator Wu has worked on public policy issues related to Canada's relations with Asian countries for more than 30 years. From 2005 to 2014, he was president and CEO of the Asia Pacific Foundation of Canada, where he continues to serve as a distinguished East Asia Fellow. He is also a senior fellow at Simon Fraser's University's Graduate School of Business and at the School of Public Policy and Global Affairs at the University of British Columbia. He is a member of the Trilateral Commission and on the board of the Vancouver Academy of Music. He also serves on the advisory boards of the Mosaic Institution, the Canadian Ditchley Foundation, and the York Center for Asian Research. Senator Wu has been a member of the following Senate standing committees: the Foreign Affairs and International Trade Committee, the National Finance Committee, the Energy, the Environment and Natural Resource Committee, and the Selection Committee, and Rules, Procedures, and the Rights of Parliament Committee. So, Senator Wu, the floor is yours.
Thank you, Amadou, and thanks also to Basma, Ambassador Beaulieu for organizing and for chaperoning our event. Congratulations to you, Vic, Saul, Adele, and others for organizing not just this webinar, but all the other webinars and the ones to come. As a member of the Senate, I can say how pleased I am personally and how my colleagues in the Senate are pleased to be partnering with the University of Victoria on these webinars and on the Victoria Forum more broadly. So congratulations, and thanks to all of you who are watching by video, taking time to spend with us on this important topic. Lots been said already by Chela and Deputy Governor Baudry. I just really want to pick up on some of their comments and start maybe by saying that the 4 waves of major recessions that Chela referred to, I've had the bad fortune of living through and observing, from the debt crises, the so-called third world debt crises of the 70s and 80s through the various financial market shocks we had, the Asian crisis, so-called in '97, of course, the more recent 2008 great financial crisis. The one observation I would make, and it really gets to the uniqueness of the moment we're in here, is that the current crisis we're facing, which is more severe, the recession which is more severe than any we've seen in our lifetime, it's not a financial crisis, not at least at the moment. It might become a financial crisis eventually, but it's a health crisis which has prompted a shutdown in the economy. But the roots of the problem, certainly in industrialized countries, don't emanate from, bank problems or asset markets or consumer debt, even though all of these have their challenges even before COVID-19 struck. Of course, there were challenges in emerging markets, accumulating debt, which has been worsened because of COVID-19. But once again, it wasn't an emerging market debt crisis that precipitated the deep recession we're in now. And so when we talk about the role of finance in helping us reset, one starting point is to think of the financial sector as in relatively good shape, if I can put it that way, as opposed to the crisis of 2008, certainly in 97 and going back into the 80s and 70s. But while the financial sector, broadly speaking, is in good shape to help us with a reset, I think one of the key points that Chela and Paul have reminded us about is that the financial sector, as we know it, led by the private sector, will in fact not bring about a great reset, whether we're talking about development finance or climate change. Really, all of the things that Governor Beaudry and Dr. Chela have mentioned are about how we can change the incentives, reprice risk, and change relative prices so that the financial sector will in fact work towards the kinds of reset we need rather than exacerbate, if you will, some of the problems that we're facing currently. And Chela has already reminded us that COVID-19 is the great unequalizer, and that's partly because of the way the financial system is working. We know that the S&P reached another new high just a few days ago. Apple is worth $2 trillion, and income and wealth inequality, while we don't have any current measures, almost certainly will be worse at the end of this crisis than it was before. So the first point to make is that the role of finance in a great reset is not simply about the existing financial system stepping up to make a reset possible. It is in some ways about the reset of the financial system itself so that it can be aligned with the major structural reforms that are needed. And the two that we are focusing on today from our previous speakers are the development finance, broadly speaking, global imbalances in debt and recycling of surpluses on the one hand, and the other one is the question of climate change. I look forward to the discussion to come when we might have further ideas about what specifically might be done to nudge the financial sector to do the things that would help with the structural change we need in these two areas. But I think we need to accept also that simply setting the right investment framework and aligning relative prices for greater and better financial sector involvement is not enough for a great reset. You know, the magnitude of the challenge of preventing a 2-degree rise in global temperature and in preventing economic catastrophe in emerging markets post-COVID will require direct investments by industrialized country governments and international cooperation among governments in order to reverse global warming and to put an end, one hopes, to the recurrent debt crises in the developing world. So I look forward to further discussion on those two particular areas of reset, and happy to contribute my own thoughts on those two areas as well. But before we get there, I want to bring up a third area for a reset that is of particular interest to advanced economies. And Canada, of course, is in some senses Exhibit A. You know, in my opinion, the single biggest revelation coming out of the COVID-19 pandemic is the gaps and the shortfalls in income security, or put it in the reverse, is the problem of income insecurity. You know, we know this because certainly from a Canadian perspective, the government has been scrambling over the spring and summer months to come up with programs, ad hoc programs really, to try and plug gaps in our existing social security system, which is pretty good as it is, given that Canada is a rich country. But there were lots of people who fell through the cracks, and therefore the government had to provide a patchwork of measures, most notably what we call in Canada the CERB, the Emergency Response Benefit, that basically paid a benefit to pretty much anyone who had earned $5,000 the previous year and wanted to claim this payment. With that benefit coming to an end in October, the Canadian government, and I know all industrialized country governments, are going to be faced with the question of how to continue to provide some form of income support, given that we are not seeing a V-shaped recovery. If anything, we are starting to see, if not a U, then an L or some kind of a W, but certainly no quick rebound. The figures in the US have come out recently on unemployment claims, and they've gone back up. We know the same is happening in Europe and in other industrialized countries. I mention industrialized countries specifically only because they have the capacity to deal with income insecurity in a way that poor countries don't. But we need to talk about developing countries as well. So without going to a long discussion about income insecurity, I think that COVID-19 has opened the door for Canada and other industrialized countries to rethink the social safety net, and particularly the role of income security measures that go beyond employment insurance. Those of you in Canada will know that this government has proposed EI, employment insurance, to take over the job of the CERB, but we don't know the details yet. However, what appears clear to me is that EI will be somewhat less of an insurance scheme after these changes, and will have to incorporate elements of some kind of a social security scheme, which will kind of complicate our EI system even more. And I can tell you it's already a very complicated system. One of the ideas that I am advocating and encouraging us to look at more closely is basic income. It's not a new idea. It's being discussed in many different countries. I think that there's an opportunity not even post-COVID, but in the COVID recovery, when some form of income support will almost certainly be needed for us to experiment, maybe do a natural experiment with basic income, perhaps at the provincial level, so that we can see if the longer term benefits of basic income come to pass. We can talk about what those benefits are in the discussion if you like, but there's a literature about how basic income could reduce, not only provide basic security, but reduce long-term costs related to healthcare and other social security payments. The Parliamentary Budget Officer, at my request, has done an estimate of what basic income would cost. It's a lot of money, and how we fund it is, of course, a big question. I would simply say that the PBO also provided an estimate of offsets that could be applied to reduce the gross cost of basic income. And depending on how politicians choose to apply these offsets, the net costs of basic income would be much less than the headline figure. Again, happy to talk about that in more detail. Well, just to close off then by saying that while the idea of basic income and the income insecurity problem is not directly an issue of the role of finance in a Great Reset, it is, of course, fundamental to what people describe as inclusive finance, even if the private sector is not involved. Needless to say, greater income security in the general population will benefit the financial sector, and it will potentially create a larger pool of savers and eligible borrowers, particularly if we also can reform the financial sector so that we introduce greater competition through various kinds of open banking type initiatives. So there was a lot of ideas in there. Let me pause and turn it back to Amadou and to say how much I'm looking forward to the discussion.
So we have a very interesting questions coming from the audience, and one has to do with this idea that basically this issue of climate change and the policies that need to be taken are also a global, there's a global commons problem, so we need also a global policy solution, and former Governor McCartney is part of that. So the question is, what can be done to reach a global consensus, a global common ground on this agenda? And I can, for example, the COP26, the UN Climate Change Conference was postponed, the one that was supposed to be in Glasgow. And you know that some big countries are, to be, let's say, diplomatic, quite lukewarm about this agenda. So there's a question for the whole panel, and maybe to Jayla in particular, what can be done really to have some kind of a catalytic effect now that we are all aware of the issue?
I'm going to mention a couple of things that we are doing at the bank, and perhaps if we could to hear from others and discuss this. One is we have been working with the Coalition of Finance Ministers to really think about principles in terms of sustainable finance for especially in terms of infrastructure that is renewable energy and much more climate-friendly infrastructure. So the Coalition of Finance Ministers have come up with principles in terms of reaching the goals, both in terms of reducing the carbon footprint, but also removing subsidies and any other distortions, as well as innovative instruments like sustainable bonds to finance climate change. This has been a major initiative, bringing the finance ministers to the table. Paul already mentioned some of the work with the regulators and supervisors. There's the Network for Greening Finance. We are actually part of it as the World Bank, so that's the role for the regulators and supervisors, as was discussed. And also thinking about the private sector, the institutional investors, which are also looking at impactful investments and how can we work with them, be it local pension funds or global pension funds, asset managers, so that there would be more finance put in for financing such green investments or climate smart investments in infrastructure.
Thanks, Jayla. Actually, there was a follow-up question. One person wanted to know how climate change will impact the world of finance and financial markets. Do any of the panelists have a sense of how this work might feed into the Great Reset scenarios? So you mentioned the work with pension funds and asset managers. I don't know if somebody wants to elaborate on this, or?
I can elaborate a little bit here. Thank you, Amadou. How this is affecting the financial sector. Again, it was just mentioned a second ago, there's a real coalition already in this kind of network for the greening of the financial sector. And this is kind of trying to find a whole set of rules and ways of behaving and trying to get the financial sector to play its part in the transition to a greener economy, trying to find ways that they disclose their risks better. Those are kind of a lot of discussions, how to do that on a consistent basis. One of the big things that you want to have when you're especially thinking about finance, both at a national level and an international level, you want to get the incentives right for people to say where they think the risks are. And this means you need a kind of a well-established framework which says, what is the way we kind of report and express the different risks? What are the different opportunities? And that's one of the big parts that this network for the greening of the financial system is working towards, is trying to figure out a framework that'll help all the financial markets, and this is a lot of central banks in the world, including these multinational institutions that are working together to try to create that. And I do think this is an important piece, and certainly Mark Carney is among others that is pushing there to kind of get the financial system to be on board, but they're asking for a set of coordinated frameworks, and I think we're trying to deliver on that. So that's kind of one piece.
Thanks, Paul. Now that we have you, there's also another question which is specifically addressed to you. Please comment on how monetary policy to stabilize the financial sector amplifies relative inequality in Canada.
Well, it's very interesting. I mean, here, when we think about inequality, inequality is on lots of different dimensions. And just to give two, for example, we have income inequality and wealth inequality, and those often don't move in the same way. And certainly at the Bank of Canada, we take these impacts and try to think quite seriously about the aspects of wealth and income inequality. When we do things like exactly trying to stimulate the economy and trying to get it to get back to its potential, reduce unemployment, and have the economy working well, we often reduce interest rates, and that really favors more employment. And in general there, all our measures suggest that actually reduces income inequality, because it's really the ones that are kind of gaining from those parts are often parts of the labor market that are unemployed and kind of working better. But at the same time, it does have this flip side aspect that it can kind of increase wealth inequality. And those are kind of two things that we have to balance against each other. In general, again, here, we think that the income inequality is the more direct kind of measure of what people are kind of facing. We also look into consumption inequality. So and then another part is even more directly of kind of figuring out how it affects people is to actually try to measure how much your different policies are affecting consumption. What can people actually buy and consume? And again, usually when we're having an expansionary policy, we're actually favoring that kind of reduction in that kind of consumption inequality. So yes, there are trade-offs. I think the wealth part versus the income and the consumption is an issue, but I don't think it should be seen as that the type of policies when we try to stimulate the economy is something that's just increasing the inequality.
Thank you, Deputy Governor. Perhaps Senator Wu, you would like to pitch in?
Well, just to pick up on the previous question, the measures that Deputy Governor and Dr. Chela mentioned are really important, which is to say that the various finance ministries and central banks have to somehow realign the interests of the financial sector so that they invest in the direction of reducing GHG emissions and so on. But that in itself, I don't think is enough or can be scaled up quickly enough to deal with a 2-degree rise in global temperatures. And there will have to be, I think, some very direct government action, particularly investment in green infrastructure, partly as an incentive to co-invest with the private sector on things like electricity grids, even something as simple as retrofitting existing buildings, which many of you know is probably the easiest thing that can be done, certainly in a country like Canada. The easiest thing that can be done, but will require a lot of funds and would require incentives for the private sector to be involved in. On a bigger picture question of how to get international cooperation to promote a great reset on climate change, needless to say, the two biggest emitters are the current problem that we have, where not only are they fighting with each other, but one particular seems to be very much against serious climate action, and the other is backsliding precisely because of the recession that China is in. If depending on the outcome of elections in a few months in the US, perhaps things could change quite dramatically. We know that Biden has proposed, I think it's a $2 trillion Green New Deal. The EU has its own Green Deal. if we come out of the COVID-19 recession soon enough, we could be on a trajectory where some of the biggest players in the world, the biggest emitters and those with the most resources would start to align in putting their money where their mouth is. And just a quick word on Canada, though. It's often said in this country by some sources that we, being a very small part of the problem, really shouldn't do very much till the other players, the big emitters, have done their part. I don't agree with that view. And, I think that what the work that the Bank of Canada is doing, the panel on sustainable finance, many others have come up with some very good ideas that will help Canada play a leading role in addressing climate change and potentially coming out better because of the investments that are made in technologies of the future.
All right, thank you, Senator Wu. Actually, this is a good segue because we have a question on basically Canada's role on helping developing countries, or more globally on what the global policies should be when it comes to developing countries. So one question has to do with debt, and then, many developing countries are saying, well, we need to invest in green infrastructure, more generally in infrastructure, but we need to invest in green infrastructure too, solar panels and so on, etc. And this creates a problem. As Jayla had said, debt has increased a lot. So the question one participant is asking is, actually just not for developing countries, but the participant is saying, in a world where all governments have enormous deficits to maintain their economic systems, do the debts really need to be paid back? Can these debts be reset? Apart from inflation risk, what is the penalty for quantitative easing when all nations are doing this in response to a global crisis? I mean, this is an excellent question. And I'll just leave it to the panel, to all panelists. But Jayla, maybe you could start because you mentioned this issue of debt increase and what could be done.
Yeah, it's a great question, and it's the low interest rates environment that a lot of us are thinking through. What is the cost of issuing debt now, and with such low interest rates, this is the time actually to address some of the issues that was mentioned. But that's not the case for everyone. Not everyone has the luxury of such low interest rates, nor access to the market. So I think that goes back to what Senator Wu said about resetting the financial sector itself. And I think, it is the case that COVID was the shock that started this recession. But I don't necessarily agree that the roots of the problem were not necessarily in the financial sector. Yes, the banks were relatively in better shape because they put in more buffers since the global financial crisis, but we have a huge shadow banking system. We have many banking systems which are not necessarily competitive, and many countries where finance is not for all. It's only for, as I mentioned before, for the relatively few. So I do think there was a need to reset the financial sector prior to COVID, and even more so now. In terms of countries which don't have the luxury of making use of the low interest and rate environment and be able to deal with the issues that they are facing now, we did, together with the IMF, our president as well as IMF managing director, called on the G20 official bilateral creditors to suspend debt service. This was back in March when there was a sudden stop. There was $100 billion that was basically a sudden capital stop, which went out of emerging market and developing economies. It's a bit better now, but the G20 did endorse in April the debt service suspension initiative. The discussion now, and it will be decided during the October annual meetings, is whether to extend that by another year or what form it takes. And it is very clear that there will be countries which will need more than that, which will need reduction in debt, and those we will have to deal with, whether it's case by case, or if, of course, unfortunately, if the situation deteriorates, we'll need to think of more systemic approaches as before. But the point is that there will be a need to provide the room for those countries that do not have access at low interest rates to be able to borrow and reduce their debt service needs or debt payment needs, so that they can really concentrate their financing on dealing and containing the crisis, but also recovering from this crisis. So I think we have a very important agenda in terms of dealing with debt issues, and the role of the private sector is going to be very critical. So far, they have not participated in the debt service suspension initiative, even though there was a call for comparable treatment. The idea was that they are saying this is short time and it's not, there's a lot of uncertainty. But I do think the private sector will need to also support actions of the multilateral institutions and the global community to support some of the poorest countries, so that, as we discussed earlier, that they can recover from this crisis without too many scars.
Thank you, Jayla. One follow-up question from one participant. Another participant is about the issue of governance. That given the level of, well, corruption, let's use the word, that is perceived, what can be done as we are helping these countries?
And that, I think, is a key issue. And part of the DSSI was to say there will be a monitoring of the fiscal outlays by the governments that are qualifying for the debt service suspension initiative. So IMF and the World Bank teams are working with countries to make sure that these savings, if you like, or this fiscal space that is created by, rather than servicing debt, it's created to go to certain expenditures, and there has to be accountability of where that money is spent, and that there is a framework to account for that, but also a call for governments to be very much communicating very clearly and explaining clearly as to where the resources are being spent in terms of dealing with the crisis.
Thank you, Jayla. Another theme which is emerging from the participants is the role of the private sector. So for example, I have this interesting question which asks, is the government the best entity to deal with transition to alternative energy sources? It seems that private companies like Tesla are better equipped to deliver on such initiatives, and it would be easier to reduce the burn on them. So this is quite an interesting question. I don't know, maybe Senator Wu.
First of all, Tesla, I think the last quarter made some money, but in every previous quarter hasn't made money. I mean, I hope they succeed, but it's still a hypothesis in experiment. But there has to be a role for the private sector, but the government also has to create the incentives and provide the network infrastructure for the private sector, for private sector solutions to function. The obvious one when it comes to Tesla is, charging stations, right? And the government not only has the ability and the requirement to create the infrastructure for private sector investments to thrive, but it also has to set the context so that private sector firms are incentivized to do the right thing. I mean, a lot of what Deputy Governor Beaudry talked about in terms of financial disclosure of corporations vis-a-vis their climate risks, if they don't disclose them, then capital will be misallocated because it will be naive and overly optimistic about the success of firms that may be highly exposed to climate risks, and those funds will not be put towards the most efficient use, and certainly not a use that will help us get to reducing GHG emissions. So there are many different roles for government, which include augmenting and supporting the private sector, but it isn't a question of the private sector or the government.
Thank you, Senator Wu. Actually, a related question is as follows. We keep talking of climate change and reset, but we have not yet made it mandatory for every organization to create sustainability reports, ESG reports. Simply putting a tax on carbon is not going to be sufficient. How does the Bank of Canada foresee the path forward to limit the climate risk in Canada? But this is open to everybody.
Well, let me say a few things. I think this is a very good question, kind of, to bring up the whole set of issues. I do think that the idea that one of the big parts, and I think Senator Wu has been pushing, is this part of creating the incentives. If the government doesn't play its role of creating the incentives, we will not have the reset. At the best, we can think of the financial sector and the private sector as reacting, but have to have the incentives in place. And there's almost no kind of way of not getting some type of pricing of carbon there as an important piece in that way. There's lots of different ways that can be, directly carbon taxes, can be kind of cap and trade systems, different aspects, but that's a really big part of the aspect. You have to get those relative prices to make it very different, such that the potential Teslas of the world in different aspects start thinking about the incentives they have to kind of create those right technologies. So there's a real central role there, and that's one piece. But as was just mentioned, it's not the only piece. We have to have that combined with these other elements of getting the right disclosure. Some of the stuff that we're working on is trying to complement that. So again, we're not in the role, we're not elected officials at the Bank of Canada. We're not in the role of deciding the climate policy itself. That's up to the elected officials. But we are trying to support those aspects of going those extra steps and complementing that by having the proper disclosure and kind of aspects, such that if the incentives are put in place, then the system can try to move in the right direction.
Thank you very much, Deputy Governor. So now we're coming, unfortunately, to the time where we have to stop the Q&A. But before giving the microphone to Adele, Dr. Adele Gitouni, could you please, for each panelist, could you please spend 1 to 2 minutes to conclude with some of your, key actions or key solutions, like takeaways from this discussion. Since we have you, Deputy Governor, you could start, and then we could finish with, we could have Jayla and Senator Wu.
Thank you very much. I think the main thing that I take away from this whole reset is how much everyone has to play their role. If we're going to be moving into a greener economy, we really have to get all the different players. And this is both at a national level and, as is mentioned, even the much more difficult aspect is at that international. It's not a one or other type of thing. So when we're asking things about like, is it the government or is it the private sector? We have to get both. Is it people in terms of their behavior, or is it just in terms of kind of financial incentives? We have to get both. We really have to get, it has to be very, and this is inclusive in that particular sense of really having all the players in our system play a role. That becomes even greater and more difficult at that international level. So the question that was posed here, how do we make sure it works? At least at a national level, we have certain institutions that help us work that. At the international level, we have certain institutions, but they're, in some sense, have less power and make that even a bigger challenge. But I do think we really want to have a big tent, very much inclusive of all the different groups to kind of come in and that everyone plays their part if they feel that others are playing their part. And so that's very much, we have to get all those pieces, which is a difficult puzzle, and hopefully we can manage. We kind of need to because, the world needs it.
Thank you very much. Jayla?
So I would like to end on a positive note as well, and similarly following from what Paul said, I think this is a great opportunity and the stakes are very high, so really coordinating at different levels, both at the regional and global level will be critical. Different actors will have to play an important role, from the national authorities to regional establishments. We also mentioned some of the coalitions and the central banks coalition. So different stakeholders coming together and coming up with options in order to make this work. I think there is so much momentum right now, and there is the opportunity, because I think no one wants to look back and see this as a missed opportunity. So I think there will be momentum, and it really underlines the need for really looking at risks, really looking at opportunities, doing the analytical work, the data gaps and all these issues that we talked about, but also thinking a little bit outside the box in terms of the types of infrastructure investments that can provide us with a much more green and sustainable future. And I think with this momentum, hopefully, given that we all face a common shock, that will bring people together to come up with solutions as well.
Thank you very much, Jayla. Senator Wu, you have the last word.
Yes, I agree with all of that. And, thinking about a Canadian perspective, it has to start from what we have control over and what we can do at the national level. This is not the time for the Canadian government to take its foot off the pedal, so to speak. The fact is we have to be mindful of debt sustainability, but we are borrowing at virtually no cost right now, and to sharply scale back fiscal spending would be disastrous. Similarly, we can do a lot of things nationally to incentivize, to nudge, to redirect the private sector in the way we've been talking about the last hour and a half, to do the right things with respect to climate change. And we should do it whether or not the rest of the world is following along. Internationally, Canada's impact is relatively small. I mean, we need to increase ODA and all that, but it won't make a huge difference. Where we can make a bigger difference, I think, is in the areas that Jayla mentioned in terms of multilateral cooperation on debt forgiveness, suspension of interest payments, changing the way in which sovereign debt is managed, particularly in times of insolvency and default. These are the structural changes that Canada can advocate along with other countries, so that we have a more robust system, not just more money helping developing countries, but a better way of doing things.
Thank you, Senator Wu. Before passing the microphone to Dr. Gitouni, thank you very much for this really rich discussions. Thank you also to all the participants with great questions. We could not cover all the great questions because of the time constraint. But to me personally, this has been a very, very rich discussion. So I like buzzwords. Ones I have literally quickly written is one is great recovery. I like the green swan, green risk, that what the Central Bank of Canada doing. The great unequalizer that Jayla mentions, and Senator Wu mentions the need to nudge the private sector. So green recovery, great unequalizer, the need to nudge the private sector, and this is a global problem. So Dr. Gitouni, you have the microphone now.
Merci beaucoup. Amadou, and merci pour cet excellent webinar. It is my pleasure and honor to thank this amazing panel. I think you guided us through very kind of turbulent times like we're going through right now, and especially to see how the finance can help moving things forward. To pick actually what has been said at the end by Sheila, Senator Wu, and Dr. Baudry is about continuing this conversation. So I would like to invite you and invite the champions to continue the conversation in the Victoria Forum. And we are happy actually to maybe host a roundtable conversation to start maybe thinking about solutions and bring the different stakeholders together. So thank you again. Merci beaucoup. Mon nom c'est Adel Guitouni. Je suis le associate co-chair de Victoria Forum, and it is my pleasure to also announce the next webinars. But before I do so, thank you to Basma and Amadou for championing as well, not just putting it together and moderating it, but also putting together this very amazing webinar and in convincing these outstanding panelists to be part of the conversation. It is also my honor to thank the Chartered Financial Analysts Association and the Women in the Capital Market for partnering with us on this webinar. The next one is in 2 weeks, and we will be talking about trust in globalization, and we're pleased to bring together this also amazing panel that will bring perspective from Europe, Africa, Asia, and North America about the future of globalization, and especially in the wake of this pandemic. So please save the date. It's not August 20th, it's September 3rd. On September 17th, we have another webinar on the future of doing business and banking. And as well, we do have a very interesting lineup of panelists for that one. And on October 1st, we will talk about bridging private and public investment for sustainable international development. And it is one of the themes that was discussed in this webinar. Again, I hope you will be able to join us for the virtual Victoria Forum. This is scheduled for November 12th to the 14th. Over the 3 days, there will be a number of think tank sessions, roundtable workshops to craft a number of solutions and policy recommendations for the private sector, for the public sectors, for the policymakers, but also for us as individuals to see what is our role moving forward and being part of the solutions. We are pleased and honored to have the trust of the Senate of Canada and the University of Victoria putting together this series of activities, and this is going on for 2020 and 2021. And we thank our financial supporter, TELUS and Vancity, who are committed and investing in this future. So I hope you will get engaged, you'll continue engaging with us and joining the future conversation, and don't hesitate to reach out to one of us if you have ideas about webinars, roundtable, and workshop. Merci beaucoup et à la prochaine.